Hello guys, so welcome to this particular session. So today we are going to be talking about risk management strategies, which I think is one of the best you should be using out there. And we're equally going to be talking about stop loss, take profits, and good platforms, how to calculate all of this before getting into a position. So let's assume that you're about getting into a position and you actually, let's say you spotted the key level of resistance as such, and you marked out everything clearly, and you're actually anticipating for a sell kind of move. Okay, so let's say you use the kind of short tool that helps you calculate. Let's say, for instance, this is just an example. You place the tool as such, and let's say you want to fit it so it actually fits, and you're trying to reach this amount. And let's say whenever you want to place your stop loss, your take profit, always choose at least the current level of resistance or support to that particular area. And I think this one is very, very close. So let's say you're about entering a position as such, and you're risking, let's say your risk to reward is 1:2. Okay, you're risking 1% of your account to get to. Okay, so this is what you have to understand. You must have this concept embedded in you at first. You must always ensure that whatever your trading capital is, whatever amount you say that is what you have to trade, and you're willing to trade with that as you commence your trading journey, or even as you're already into your trading journey. You must have one thing in mind. You must always ensure that you split that trading capital into the number of trades you want to take. Like for instance, if you have $1,000 you can always say, okay, if I'm comfortable risking 100 USD per trade, that means that's 10 trades. That means I should always ensure that if I'm entering a position, I should not be risking more than 100 USD per that trade. Okay, and what helps us to maintain that particular amount per trade is the lot size we are using. All right, so if you want to enter 20 trades and you have 1,000 USD as your trading capital, that means you have to be using $50 per trade. That means if the market should go against you, okay, you should not be able to wipe out more than 50 USD from your trading account. Okay, so now if you're using trading tools like Xness, like the web terminal, to actually work, then it becomes much easier. Like this, the web terminal, it shows the same chart as that of TradingView. So what happens then is, while I'm here, this is the same chart. If I want to enter this position here, Xness gives me the ability to be able to do all of these calculations without necessarily doing them manually. Like for instance, if I'm about to take a short position here and I click sell, for instance, when I click this sell here, I'm not yet in the position. It gives me this stop loss. Okay, so I have the ability to adjust this stop loss to where I want, to the amount I want to actually lose, just by dragging and pulling this particular line of the stop loss that it has actually made available here. So as you can see, it shows me that based on where it is, if this market goes against me, I'm going to be losing 94 USD, but I want to lose 100 per trade, so I can shift it up more. Okay, or even if I don't want to shift it up more from there, what can happen is I can, if I'm so sure that this zone, the market is not going to come here before going down, I can rather increase the lot size. As you see, when I increase the lot size, you see that the balance equally increases here. Let's say for instance, as it's here like this is at 97. If I reduce the lot size, you can see the balance, the distance from the entry position to the stop loss, the balance has gone down. But if I increase the lot size here, automatically it increases it. So keep increasing until the amount you're comfortable risking. So that's it right there. It shows it's at 100. If the market goes against me, I'm going to be losing 100, so I'm comfortable with that. Similarly, you can click on this TP and put your take profit to this. You can now pull it towards the zone where you know very well that the closest level of resistance to that particular trade, that's going to be the closest level of support, as it shows here. So here it automatically calculates. So I'm going to be risking 100 to get 300. This is ideal. Okay, I'm risking 1 to get 3. This 1:3. Okay, based on this particular lot size that I'm using. But the main thing, you must always be comfortable with your loss. Is it possible the market, based on your strategy, is it likely that from here we're just going to keep going down, or it can go against me to what level? If I'm comfortable that where it is here, it's no longer going to take me out of the market, then I'm good to go. So now you can see that I'm risking this $1,000. It's a demo account for practice purposes. Then you can definitely know that if it goes against me, this is what I'm going to be losing. So if I'm comfortable with that, then I can then hit the sell, the confirm sell button. Okay, so once I hit the confirm sell button, I'm not supposed to start opening multiple trades for the sake of just seeing a lot of trades. Okay, so that's how it works. You must have that in mind. But then if you're using another broker and they don't have the ability to do all of these calculations as you guys are seeing here on XNES, then what I'm going to advise for you to do is to use Baby Pips, the lot size calculator. It actually makes it much easier for you. Like how do you use it then? Let's say you did your analysis already on TradingView and you wanted to enter the position as such. You can always use this short tool so that it calculates the pip value. Okay, so for my entry position here to my stop loss, it shows it's about 58 pips, and to my take profit position is about 129 pips. So when I get over to babypips.com, definitely I should set my account balance as 1,000. How much am I about to risk? Okay, I want to risk only 100 USD per trade here. So it's going to calculate that automatically. Then the stop loss in pips. So I'll get back to TradingView, and my stop loss in pips, for my entry position to stop loss is 58 pips. So I take that 58 pips. Then I head over here and I put 58 pips. I choose the pair, that's GBP USD. So I search for that pair, then I calculate. So once I calculate, it tells me automatically that this is the amount that's going to be deducted from my account if the market goes against me. Then this is the lot size I should be using on that account. Nothing more than this. Okay. So if you're using this lot size, if the market goes against you, then you're going to be losing just 100 USD. So just to recap before we get to end the video. So whenever you're trading, you must always ensure that if the market goes against me, I'm comfortable with this amount of money that I want to lose now based on your trading plan. As I already said, if you have 1,000 USD or you have 100 USD and you're trading 100 USD, you must always ensure that, let's say if you want to place 10 trades, that means your risk should be $10 per trade. Okay. And if you want to open 20 trades with a $100 account, that means your risk should be $5 per trade, even though that's quite little. But I'm making you understand the concept. Okay, you must understand the concept of what's happening. So whenever you do this and you have a good risk to reward ratio, like as you can see here, this is 1:2. Even if you have a good strategy that works, okay, and now you open 10 positions or 20 positions, and let's say if you open 10 positions and you know very well that you have a good strategy that works, if let's say 4 trades actually go wrong, definitely the 6 that go right with this proper 1:2, that means you're risking 1%, 1% of your account to get to. That means if you use that for the 6 trades and they went through, if it is going to make up for the other trades which you lost. Okay, that's what makes traders profitable. Not that they don't lose trade, they lose trade, but overall the winning trade actually make up for the losing trades. So this is what you need to have in mind. Okay, so number one, you need to make sure you have a strategy that works and you've back tested it. Number two, you must make sure you have the money management principles which I've made mention in this video. And number three, before entering any position, you need to always ensure that if it goes against you, you're losing just the exact amount of money which you wanted to lose before entering the position. Don't always think on the positive only. Always think if it goes against you, then you should be comfortable with it before thinking on the other side. Okay, so with that being said, I think we can end here for today, and I look forward to seeing you guys in the subsequent videos. Don't forget to like, share, and subscribe for more great contents related to trading like this. So